Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Thursday, December 20th, 2018. So I wanted to do a little bit of S&P analysis using the SPY tracking ETF. Basically, I wanted to point out a couple levels here. Number one, we're testing right now. There's a gap fill here going back to basically 2007. Looks like September 2017, actually, on that. And again, that's where we currently are. You can see a bunch of little pivot tops right in this range. So there is support in this range all the way down to about the 240, 245 Pierce. However, as we know, the markets may not stop there. So where's the next big level? The next big level. So basically, you're about at 246 right now, right? You can see it right here, 246. So again, you're entering that level all the way down to about 245 of support. If you take that out, the next big support is going to be right here. You can see it very clearly at 240. Pivot high, and again, it's hard to see, but you can see the pivot low right there. That tells me it's a firm level of support. Now, granted, as I said before, there's no guarantees in this market as it's more of a panic sell market at this point in time, not necessarily based off anything more than fear, but fear is very powerful, just like greed on the other side of it in 2017 and 18. We saw the markets going to astronomical levels. So the same thing generally applies now is to the downside, you're likely to overshoot. And you can see, again, we're coming down to that 245 level here very, very closely. So this will be a big level to watch here into the end of the day. Do we close below 245 today? Spiders down about 2.25 points on the day. All right, but again, if we do take out 245, guys, you're going to be looking at 240 on the SPY. If 240 gives way, then you have a secondary level here. This is a mediocre level at best, but nonetheless, it is a level, and that's about at the, let's see here, 232 level. My guess is I'd be somewhat surprised if we don't get a bounce at least at 240. 240, the current level that we're at 245 and 240 are actually big supports. This one down here is kind of more of a minimal one. Eventually, I will be honest with you guys, I think this market, even though I expect a bounce in this range, somewhere in this vicinity, I think we will see a bounce. I still think that the markets are going to head much, much lower in January and February. I have a longer-term target on this market at 220. So really, I mean, if you think about it, if we're dropping 5 points a day, we could get there real quick. But again, I kind of think at some point you're going to see the market, catch a bid and get some sort of bounce. There'll be some sort of positive news at some point. My guess is, again, there'll be something on trade. Since the Fed really isn't going to be a catalyst in the short term, we have to start thinking about, well, what's the other factors here? There's probably going to be some positive development as the market comes down here on trade. And again, we'll have to see how that goes. But again, notice how, look at this, very cool on the spiders, how you pierce the first line and basically kiss the second line at 245. Again, this is a big support level. In fact, I was looking to buy it as a day trade on a pierce of 245, but right now it looks like it's bounced just prior to that level. So we'll keep an eye on it, folks. But I mean, this is pretty remarkable. This is pretty remarkable here. What you can see here is you've had multiple downside days here. This is, 1, 2, 3, 4, 5, 6, 7. So basically, you're talking about a time count. For those of you that know time counts, you're coming into a time count as well, right, in this level. I pointed out the Russell chart to members yesterday. I think it's worth taking note, even though the Russell's down significantly today. There's a lot of support down in this range, folks. Pivot point and just above where we currently are, pivot and pivot. And what's even more powerful, and I'll show it on the weekly chart here. Look at the weekly chart here. All right, look at how you're piercing the 200 right into these pivot points. So you have the 200 moving average. Now, you could see you were below the 200, but this is a weekly chart, so it basically it doesn't conclude until the end of Friday. And even if you close below without confirmation, it still could bounce here. But you have the 200 moving average weekly plus all these pivot points. So actually, one of my favorites is the Russell right here. The Russell, again, what an amazing sell-off. Traded as high in earlier this year as 174, and it's now at 130. Basically got down to almost 130 on the day. That's a huge sell-off, folks. That is a big-time sell-off. Again, markets are bouncing back a little off that 245 level on the spiders. But again, for this market to bottom, obviously volume's important. If we go back to the spiders here, I want to show you this. The volume on the spiders is going to be pretty solid today. We'll probably do about 200 million again like yesterday. So that's good volume, but we need to see some sort of price action reversal. Price action reversal would be very important to see, and we haven't seen that yet. Again, that's something that we'll be watching for as well. So again, key support levels on the spiders, 245 to 246, where we currently are. If that breaks 240, those are your key levels. And again, what you're watching for is individual stocks that start to reverse. Watch for those very, very closely. I also think oil is important. Oil Had a bounce yesterday, but right back down. We didn't get 2 days up in a row. That's something I told our members was very, very important to happen. You can't have a pivot low on oil until you have 2 consecutive up days back to back. And I showed them by looking at this chart, you really don't have, from this high here, you don't have 2 consecutive up days of significance the whole time. You got 1 day bounce here, and then the next day down, down, and then a little bit of a bounce again, then down again. Here was a reversal day green, but look at the next day, right back down. So you've had 1 day bounces just like you had yesterday on oil, but you haven't had 2 consecutive days in a row. And in my opinion, that's what you're looking for on crude oil. So watch for that. If you're looking for a definitive bottom in crude oil, you need 2 consecutive bounce days of significance. So when I say bounce days, I don't want to see the USO up a penny on the day. A penny on the day is flat. What I would want to see in terms of significance is probably about 15 to 20 cents for 2 consecutive days. Yesterday we had about a 20-cent up day, but today it didn't follow through, and you can see we're down 30 cents and change today. 2 consecutive, let's say, call it 20 cents in a row days, then you got something in the mix for oil. I do think oil stocks are probably the most oversold. I have seen them almost ever. Pretty amazing. Like, look at Schlumberger here, folks. I mean, this stock has just been in a tailspin. Just a couple months ago, it was trading above $60, about $63. So it's dropped about almost $30 in 2 months, almost 50% of its value. That's amazing, folks. I mean, if you think about it, oil hasn't dropped 50%, although it's not too far off. But yeah, I mean, that's something else, folks. Even for me, that's pretty amazing. So we'll see how things trade out here. Keep an eye on things. Again, markets are starting to come back in again. Watch that 245 level. You can see we're at 245.80 on the spiders. Again, if we zoom out here, I just want to go over these levels one more time. This is a key area right here. Huge level right here, folks. Then you got the 240 level, then the 232 level, and then ultimately the 220 level on the spiders. We are due for a short-term bounce. Markets are extremely oversold. You have a technical time count here, which are very powerful, combined with technical support. So it leads me to believe it should be sooner than later, maybe as early as tomorrow. But again, as I always say, there's no guarantees when fear grips. Just like on the upside, if you remember back in 2017 and parts of 2018, the market would just go up and up and up every single day. There's no rhyme or reason. A lot of the talking heads would try to tell us about fundamentals, but now look at the fundamentals, right? I mean, fundamentals are deteriorating. Earnings growth, they used to say, 10-15% earnings growth. Now it's like 2% earnings growth, 5% earnings growth. So they, obviously back then they had their heads up their butts at that point and had no clue. They were just trying to figure out reasons, and it was just greed, greed, greed. Now you're seeing the inverse of that, and that fear, fear, fear. So, all right, guys, have a great one as always. Here's your levels on the spiders. Now you know what to look for on oil. Let's keep an eye. Take